Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your real estate report for December 2025. Today is the beautiful day of January 20th, 2026, and we're always dealing with past data. So here we are into our report. We're going to go into existing homes first. There's our lovely chart. Big thing to notice is the way that the inventory has dropped off over the past couple of months. That's not unusual, simply because we've got the holiday season that we just got through and we saw a big drop off on the inventory. That'll probably come back here in the springtime in late February into March and into April as we typically do. So big story there, really no big story. When we're looking at it, sales were up 1.74%. We sold 410 homes in the month of December 2025. Nothing really exciting about that unless you were one of those sellers hoping to get sold. Inventory is up 1.37% year over year. We've got about 3 months of inventory available for the buyers that are in the marketplace. They are experiencing lower interest rates. We'll get to that in just a couple of minutes. And our price actually dropped down just slightly, about $1,000. We were at 287, 232 last year. We went to 286, 259 this year. So roughly about $1,000 drop. That's pretty good considering that's less than inflation. We actually had a negative number there, and that's good to see that our buyers are getting more value and our sellers are still getting good numbers. Average size of the home down just slightly at 1,818 square feet. Price per square foot went up because it's still high. We're at 156.08 there, and the days on market was 58 compared to 76 last year. So if you are a seller in our marketplace, on average, you're selling homes in about 58 days. That's down, or it's got, well, I guess when you look at it, it's the number of days is taking longer than the BC, the before COVID years. But during COVID, we were down in the 30s. And now we're back up to what I've called a more normal market at about 58 days. And as you get higher in prices, you usually go up in the number of days on market as well. So overall, good report, just nothing really exciting about the resale market, except that we still have a market. And after I've been in the market for a long, long time, I remember 08, 07, when the market just kind of evaporated. This is really good. We're not in that kind of a market. Now, on the new homes, we've got a little bit different story to tell. When we look at the new home sales, that's where we're going to see the biggest impact on the market. And don't be surprised. I was shocked at the number of homes that we actually sold. But here we go. This is our charts. Our inventory has been level. When we look at the pending sales are still doing okay over here, and our sales were flat. Well, compared to last year, really flat. 200 homes sold in the month of December 2025. Usually we see an increase where the builders are trying to push the inventory out. We didn't see that, so that gave us a 42%, 41.9% drop in the number of homes that closed in the month of December. Either they just couldn't get them finished, or I don't know what happened there. It's just odd that we only saw 200 homes sold. But remember, they were still catching up a year ago. Maybe it's just that number was that big when we sold 344 houses last year. Months of inventory is up almost 10%, 9.09. We're at almost 5 months of inventory. Remember, cut that number in half because we don't know exactly how many are ready to be delivered in the next 30 to 60 days. So realistically, probably about 2.5, maybe 3 months of inventory that's available because the builders still have to finish the houses. For average price is up, $361,922. That's a big thing right there. And then the average size of the home is also going the opposite direction at 1,897 square feet. So they're getting a little bit more money and they're getting a bigger house as well. So the builders have figured that out, at least during the month of December. Average price per square foot, $176.47, and days on market, 109 compared to 159 last year. So they're still selling them out fairly quickly at 109. Remember, they may start at 0, meaning there's no slab, there's no house, and then 109 days later, on average, they're selling it. That's pretty good when they can deliver something like that with the complexities of building a house. So overall good. Biggest shocker is that we only sold 200 houses, only closed 200 houses during the month of December 2025. Now, on to our mortgage rates. Big number here. Conventional mortgage, 30-year fixed at 5.91. We think that's been driven by the fact that President Trump has pushed some of his, call them friends, cronies, whatever you want to call them. He's asking for the finance world to buy up to $200 billion worth of mortgage-backed securities. And once that was pushed out, interest rates started to slip down just a little bit, especially on the conventional. The interesting thing about this is that the FHA and the VA rates didn't go down, but the conventional did. 30-year FHA 6.12, 30-year fixed VA at 5.5. It's still very, very low. So in our market, that's a big deal because we've got so many VA buyers that are out there. Our market could be driven on that both in the resale market and in the new homes market, especially with some of the builders offering the buy downs and the big incentives that they've got there. So overall, good report on the mortgage rates. And as they're trying to get pushed through this, we may see interest rates go down even more, which could create a shortage in inventory. And usually when we see a shortage in inventory, our prices go up. So it's kind of a double-edged sword. I'm getting less money, paying less on the interest here, but I pay more for the house over there. Which is better? Well, it's hard to balance those things because these are market forces. There's nobody that's in control of them altogether. It's just what can I get with my income, my credit score, my debt to income ratio, and what is a seller willing to sell for in today's market. So just big mix there. The index report, we got some negative numbers over here on the 1 month, pretty good on the 3 month. The biggest news there, we still got a market, and then we're interesting to see how the Texas, it's calling it Y'all Street in Dallas, how that's going to happen next year as we get into that, maybe even later this year as the Texas Stock Exchange opens up, and see whether or not some of these rates differ because of the fact these are coming from the New York Stock Exchange instead of the NASDAQ or something like that. So 3 key takeaways. Number 1, mortgage interest rates have dropped since last month and buyer activity has increased. We are seeing more buyers out showing properties right now. Doesn't mean they're all writing offers, but we're at least getting the showings, which is typical for this time of year as people are waiting to get their W-2s, their 1099s, and see if they're going to get a tax return that they can put as a down payment and then buy something during the month of February and into March. Number 2, home buyers still have more inventory to choose from than they've had since 2013. That's going to be consistent. Even with that drop during the month of December on resale homes, we'll see that tick back up as we get towards the latter part of January and into February and into March. And then number 3, new home inventory will likely get a little bit tighter. Now, this is a prediction that I've got here just because of what I've seen in the news. It's likely going to get a little bit tighter because of a labor shortage. I don't have to go too deep into this for you to figure it out, but the labor shortage that we're going to see is people not migrating north into the United States, into Texas, into El Paso specifically, and going to work on construction sites because of immigration statuses. So we're likely to see a little bit of a shift in the inventory. It may get a little bit tighter, which could push the prices up a little bit as long as the affordability is there. If the affordability isn't there, we're going to go back down on price, but we'll also shrink on the size, and we'll get back into that shrinkflation that I talked to you about 2 years ago when we started seeing the differences in the prices and the sizes of the house as the market forces took over. So overall, real good report. If you've got questions about how this affects you on either the builder side, the resale side, buyer, seller, doesn't matter. We're happy to visit with you and see how we can be of service to you. Call me at 915-588-1850. Text me on that number or email me, patrick@patricktuttle.com. Like and subscribe to this channel if you like the information that we're putting out. Thanks for watching. God bless you and make it a great day. Bye-bye.